Good morning. We will pay attention to provision for bad debts today when we create a provision. On the 31st of December, the debtors control showed an outstanding balance of 11,500. The owner decided to create a provision for bad debts of 350. Your debtors control is your positive asset, and the provision for bad debts is the negative asset. The debtors control has a balance of 11,500. To provide for people that will possibly not pay their accounts in the future, we create a provision for bad debts that is a negative asset. Debtors will increase on the debit side and decrease on the credit side. We would normally credit the debtors control when we want to decrease it. But because we don't know who are the people who will not pay, and your debtors control account must be a summary of the entries in your debtors ledger, you cannot record it on the credit side of the debtors control. So we open a separate account for provision for bad debts, but these two accounts actually form a unit. The debtors control is the debit side, and the provision for bad debts is the credit side. When we record this in the balance sheet, we will subtract the provision from the debtors. So to reduce my debtors, I will credit provision for bad debts. Provision for bad debts must always have a credit balance because it's my negative asset. Because I credit the provision for bad debts, I will debit the provision for bad debts adjustment. The adjustment account is the nominal account. So that means this is the only account that you have that can sometimes be an income and sometimes an expense, depending on what happens in the provision for bad debts account. If we increase the provision for bad debts on the credit side, then it means we will record it in the provision for bad debts adjustment. On the debit side, then it will be an expense. If we decrease the provision for bad debts on the debit side, then we will credit the provision for bad debts adjustment, then the amount will be an income. At the end of the year, we will transfer this nominal account to the profit and loss to show that we have an expense of 350 that will reduce the profits. In the notes to the balance sheet, we will show that the debtors owe 11,500, provision for bad debts is 350, so what we expect to receive from the debtors in the future is 11,150. So that's my net realizable value. That means what I expect to get. In your balance sheet, you always have to show the lowest of the cost, that means what they owe you, or the net realizable value, what you expect to receive in the future. If the NRV is lower than the cost, then this is the amount that you will record in your balance sheet. With the creation of provision for bad debts, an expense provision for bad debts adjustment will be debited because expenses are always debited, and the negative asset provision for bad debts is credited to increase the provision for bad debts on the credit side to reduce my debtors. In the balance sheet, the provision for bad debts will be deducted from the debtors. In the income statement, the provision for bad debts adjustment will be shown as an expense because for the current year we created the provision for bad debts. If the provision for bad debts is increased, it is shown as an expense in the income statement. If the provision for bad debts is reduced, it is shown as an income in the income statement.